Joining us now for a closer look at what those sales really mean is Jeremy Anwyl. He's the CEO of Edmunds.com, which J.D. Power has named the top auto website. Great to have you, Jeremy, on the show.
Great to be here.
It certainly, at least the headline in these numbers, seemed to take the markets by surprise. Was it all positive, though, from your perspective?
Well, I think from one perspective, anytime you're selling, the sales rate was about 13.6 million units on an annualized basis. That's got to be good news. The question is what's driving it. Is it indicative of pent-up demand or some sort of fundamental economic turnaround? I think if you look deeper, what's really happening is, if you remember back in March, we had this devastating earthquake and then the tsunami. And car sales collapsed in the spring and summer as prices really shot up. Inventories were in very tight shape. And what's happening now is consumers who are ready to buy in the summer but didn't because the market conditions were not optimal are now hearing, even though incentives are down, there's a lot of car companies that have special events, a lot of year-end sales going on. These buyers are coming back into the market. What that suggests to me is that this effect is going to be limited. The market should be cooling down a little bit as we get into the first quarter next year.
Jeremy, when you look at U.S. versus Japan in terms of auto sales, are we seeing the Japanese auto manufacturers catching up now, given what happened to them at the beginning of the year?
To a large degree, I think the damage that was done in terms of the sales tempos for both Toyota and Honda, and to some degree Nissan, is past. Honda's doing a little bit of recovery, but Toyota actually showed sales increases for the month of November, so most of that is behind them.
And to what extent do the cars, the actual type or the make or the model of the car, indicate anything about the economy from your perspective?
Well, I think there's a couple of factors. It's interesting that even though fuel prices are still at a fairly high level, the market has been shifting back towards larger vehicles. We saw really back in, I think in May was when there was the biggest shift towards the smaller vehicles. That's kind of shifting back. But there is kind of a sweet spot in the marketplace today, and these are the cars that are being introduced with very efficient but traditional internal combustion engines. Ford has these with their EcoBoost. GM has the Eco. Other car companies are coming out with similar technologies. And these are vehicles that people recognize. They deliver good performance, great comfort, good safety, but with also improved fuel economy, and they don't cost a whole lot more. That seems to be where the market is today.
Jeremy, between now and year end, what do you think we'll see in terms of auto sales as well as incentives? Are we going to see dealers trying to push inventory off their lots before year end?
Well, I think there's a couple things to think about when you think about December. December is usually a very good auto sales month. So for the seasonally adjusted rate, which is the number that the industry likes to talk about, to actually be above November, we're going to have to see a big jump in actual unit sales. The really interesting question, though, is as you think about next year, because I think most forecasters are expecting sales to increase next year, but even with increasing sales, we see competition increasing even more. I think that's one reason why there's a drag on auto stocks, because even though sales could be up, profitability could be down next year.
Now, some of the models, when you talk about U.S. sales, Jeremy, we've talked about the bigger cars once again becoming more popular. As we look over to Asia and some of the emerging markets, which of the U.S. auto markets, U.S. auto manufacturers, has a strong competitive advantage, and is it based on the same model that's popular here in the U.S.?
Well, interestingly, one of the strongest competitors in terms of U.S. auto companies is actually General Motors. They are very strong in Asia, very strong in South America. Europe is a bit of a basket case for everybody. And believe it or not, one of the most popular vehicles that General Motors sells in China is actually the Buick. In fact, that's one reason I think that they actually didn't discontinue the Buick line, was because of its popularity actually in the Chinese market.
And for Toyota and Honda, they continue to dominate sort of in, would you call, the smaller size market, right? Toyota's Camrys and Corollas continue to be popular product. And for Honda, it's the Civic. Does that change over time, do you think, or do they continue to dominate in this space?
Well, I think it's actually changed already. So think about the Camry, for instance. Toyota's just introduced a new Camry. General Motors has a new Malibu coming out in the spring, but there's also a Sonata, a Fusion, an Optima, the Volkswagen Passat. These are all actually very competitive vehicles. So the days where there was like one or two competitors who could dominate a segment seem to be behind us. And that's one reason why we're really forecasting very tough competitive environment as we move into next year.
All right, Jeremy, we've got to end it there. Thanks so much for joining us. Jerry Anwyl, CEO of Edmunds.com, with a look at the auto sales numbers. What's behind those numbers, of course, perhaps pent-up demand.